Thank you, Mark, and a big hello from London. Well, not many weekly technical patterns last week, but the ones we've had were interesting. There was a weekly key reversal down in Aussie dollar against the US dollar, though interestingly not in the Kiwi dollar against the US dollar. However, it should be noted this was, in its way, a third successive weekly key reversal down in this currency pair. You see, we've had a weekly key reversal down in each month, successive month. One in August, September, now October. The August one was tentative. The September one was very successful, and the one we've just seen last week has also gotten off to a good start. There was also a weekly key reversal up in US dollar Turkish lira last week, though considering this market is mainly moving up most of the time, I was more surprised that the previous couple of weeks had given enough of a limited action that for last week to be able to build a weekly key reversal at all. The final currency one last week was an interesting weekly key reversal down in US dollar against the Taiwanese dollar. This was a bearish one, despite the resurgence of the market last Friday, and we've so far not had any follow through lower. However, yesterday's action of an indecisive spinning top at the top of the market was in its own way telling as to whether the bullish incentive was still there. You see, I'd keep an eye on this one, specifically to see if the market may create a possible double top or alternatively a possible bull flag. The latter would be, despite last week's weekly reversal down, significant as we are right now at the top of the market. The next one is a financial one. We had a weekly key reversal up in German DAX stock index futures, but only just. I added it only just because it is becoming important. You see, there's a lot going on in this market. To start with, last week we had a crossover of tines, specifically the broken upper tine, currently at 12,195, of the early June to mid-August bearish Andrews pitchfork, moving below the middle tine, currently 12,359, of the still intact bearish shift pitchfork for the same move. And as anyone who knows me will attest, when you have these tine crossovers highlighted on my chart with a red circle, you may have one or more of the following: a change in trend, a reinforcement of a trend, and volatility. Well, we had volatility last week, as can be evidenced by the weekly key reversal. The question now is whether the time crossover that caused that weekly key reversal up against the run of play of the market, whether it will follow on with a move higher. I have to say right now, and it is early as yet, for such a weekly pattern it is not conclusive in either direction. We've so far had a move down to the next support at the 50% Fibonacci line of the March 2020 to November 2021 move at 12,132, but that is still within the range of last week's move. Additionally, the whole action since about the middle of September is possibly indicative of two patterns: a possible double bottom, usually seen as a bullish pattern, and conversely, a bearish halfway hesitation. These two need to be resolved, which actually seems likely in the next 2 weeks. But in the meantime, just keep an eye on this one. I've one final postscript to this market, and that is, when I see such a weekly pattern, I look to similar contracts elsewhere that could offer confirmation or contradiction. Well, in both the US E-mini S&P futures and the UK FTSE futures, we saw last week have outside weeks. These are the lesser cousin of the weekly key reversal. Neither is subsequently looking that bullish this week, though the action is still contained within last week's moves on both. Next is a single commodity, and that is the NYMEX Henry Hub gas future. This had a weekly key reversal down last week, but has been only a limited attempt lower this week, and prices have recovered back up towards last Friday's close. To explain this, you only need to look at the rising long moving average, currently at 6662, which intersects both last week's and this week's actions. Last Friday, though it made a weekly key reversal down, it did not manage to close below the long moving average. Indeed, we only had the one close below the long moving average last week, though this week already is looking better with 2 consecutive closes below on Monday and yesterday. However, today is higher, over the long moving average, and that is a question mark on this market's ability. over the to pursue the bearish incentive. I would only add this: the ICE Dutch TTF gas baseload future, the equivalent for this in Europe, has not as yet tested the long moving average. This moving average is still in that market below the market, currently at 138.35. So maybe interesting to look at the Henry Hub contract as possibly leading the way, maybe. Finally, one for the TikTok generation out there. There was a weekly key reversal down in the US stock AMC last week. In this one, there has indeed been a follow-on lower this week, though we are quite close to the lows of last May. Now, I'm always happy to answer any direct questions with anyone who's interested. And with that, I'll finish this section from London. I hope that you found these comments useful.